On Thursday, the Nigerian stock market had its first weekly gain, albeit a little one, propelled by shares of NACO PLC, Honeywell Flour Mills PLC, and Academy Press PLC. The market's year-to-date positive returns grew to plus 20.71% after the conclusion of trading on the Nigerian Exchange Limited. The stock market has dropped by 0.51% week to date and 0.49% month to date. Although the market closed marginally in the green on Thursday, observers anticipate it will trade mixed with little activity. The all-share index and market capitalization increased from their lows of 51,556.54 points and 27.794 trillion naira from the previous trading day to 51,563.73 points and 27.806 trillion naira. So joining me is Azeez Lawal, Managing Director, TrustBanc Asset Management Limited, even as we take a look at the performance of the Nigerian Stock Exchange. Good morning to you, Azeez. Azeez, you might have to unmute your mic so that we can hear you properly.
Very well, I can hear you.
All right, beautiful. We can hear you now. So with the NGX moving slightly into bull territory, is this a bit of a reprieve for the market?
Yeah, thank you for the question and the review you gave earlier. Apparently you gave insight into what the performance of the market has been doing. If it's a reprieve, but it is more like it, because what we've seen in the last 3 days is more of shallow performances where the market is narrowly coming into the positive region or going into the negative region. So it's just a reprieve. We expect this narrow or shallow performance to persist for some days. Thank you.
Well, you call it a shallow performance. Last week, we had some stories that had to do with the U.S. bourse being also affected by the global crisis and spiraling, or let's say plummeting, as it were. So tell us, are we seeing this a similar kind of shallow move across the continent, or should we say globally?
Yes, the performances of stock markets globally, it's not been even, more of uneven performances. Because of different economic realities. We are talking about globally, inflation is a scare, but it's not like that in Morocco. Again, global inflation is a scare. The way the U.S. stock market is reacting to it is not the same way Nigerian stock market is reacting to it. We are well above 20% in terms of performance year to date, and we currently rank as one of the best performing stock markets in the world, even though our economic realities seems to be worse than US. So it just tells you that beyond economic realities and external shocks, there are other parameters that determine the fate or performance of the stock market. Largely, what is keeping Nigeria's equity market at the level it is presently is more local investors. So we don't have so much foreign interference. So it's not a case of typically for local investors moving portfolios, waiting for positive performance from any releases of companies. So those are more like the factors and realities shaping the performance of our market more than global economic shocks or economic realities. Thank you.
So, some other big news that we are hearing for the NGX shows that in the last 20 years, about 121 quoted companies were said to have been delisted. So tell us, what actually leads to a company or companies being delisted on the platform?
Yeah, thank you for that question. It's really an interesting one, and it's kind of popular now in the media space. Yes, so depending on where you're coming from, right? It could be positive, it could be negative. But mostly in the context of Nigeria, it's really been a positive development. To answer your question specifically, companies delist for different reasons. Strategic reasons, if you are violating the post-listing requirements of the Nigerian Stock Exchange, you're going to be delisted. And it could also be a voluntary move. Strategically, the popular example is Diamond Bank delisting. Diamond Bank had to delist because following the acquisition of Access Bank. We've also seen recently of CCNN following the acquisition by Boa Cement. CCN was delisted. So, I mean, it could be strategic and it could also be voluntarily, and it could be as a result of violation of the post-listing requirements of the exchange.
But then, do you
Either
consider
way,
this?
I'm with
But,
you.
but
I'm with
Aziz,
you.
do you consider this as a source of concern in any way?
Yes, definitely. It can be a source of concern, particularly for an investor who seeks to, because delisting, right? It deprives the investor of one of the major functions of the stock exchange, which is to provide liquidity. So provide liquidity in the sense, in context, you have the shares of a particular company and you want to sell those shares to fund a particular need. But on getting to the exchange, you find out that the stock has been delisted. What it means is that you can't even find the stock, talk less of selling it to raise funds to meet that particular need. So in that context, it could be a source for concern. But again, look at, there are also companies where, in the case of acquisitions, for example, or mergers, where a stock is worth 2 naira, and by the time it was delisted to become another company, it's now worth 10 naira. That's an advantage for the investor. So, but what we have seen, based on the delistings we've seen recently, it's not really a source of concern, but rather it is more bringing kind of sanity to the stock market.
All right, so let's understand, Aziz, what actually happens to stocks who are delisted? That is the companies and the holders. What happens to them? What happens to their place? What happens to their stock?
Like I said, you can, number one, if your company was delisted, I mean, a company you have stake in was delisted for a strategic reason, you probably will have a higher stake. That's typically the reality. I mean, look at when Diamond Bank was delisted, it was trading below 5 naira. I mean, Access Bank currently is trading above 11 naira, so you're in a better position. The same thing for CCN, it was well above what the current price of Boa Cement is. So it puts you in a better state. So that's the fate. So for companies that have been delisted for strategic reasons, definitely the investors typically go into a better position. But for companies that have been delisted for reasons of violations, you can be sure that even before these companies were delisted, it's not like they were giving the investors or their shareholders, I mean, some kind of significant advantage. You probably were not able to trade on those shares even before they were delisted. So, if delisting is the final impact that we see. But typically before then, particularly for the ones that for the investors that are not having a good time, typically when such companies are delisted, you must have been seeing the signals before it was delisted. It's typically, it usually does not come as like a shock, like it is made to, like the public is made to see, or the way it is being interpreted. Again, largely delisting kind of it kind of improves the position of shareholders really in the long run.
All right, so finally, Aziz, shares and stock used to be one of the best forms of investment, but then looking at the trend now where the Naira has deteriorated over the past 4 decades, would you say that it's still financially wise for an individual or an investor to put their monies in stocks?
Quite interesting. Yes, I mean, yes. I mean, different financial assets or avenues to invest, they come with their own risk and of course return. I mean, there's still data on the side of equities that still remains the most prolific investment option. In context, maybe between early 2000 and now, the naira may have lost, I mean, maybe close to 100% of its value. In context, if you pick a stock like Nestle, for example, in the early 2000s, it was trading less than 200 naira. Currently, it's trading around 1,400 naira. I mean, that performance, it's over 500% gain. So compared to the loss in value you see of naira, you're still doing very well. So, I mean, depending on depending on the shares or the value of the shares that you are, and depending on the time you entered,
Okay.
I mean, equity still remains the most prolific option to grow and preserve wealth.
All right, thank you so much, Azeez, for joining the conversation on Stock Watch. Really appreciate your presence.
Thank you so much for having me. Thank you.
And so that is the NGX sounding a note of warning to defaulting companies right there, trying to let them know that there will be no sort of impunity being tolerated. And in a way, that is somehow giving a bit of confidence to investors on the platform. But then let's see how it pans out. Maybe things like this will be avoidable later in the future. We do not know. But then what the NGX is trying to do is to ensure and sustain the integrity and standard of the platform. Thank you so much, Azeez, for being part of the conversation. Let's quickly go on a break now. We have another interesting package for you on the show. We'll be back after this break.
Flowers don't always just bring a sweet smell to them. They could always bring some sweet money as well. And Kenya is finding out that the floriculture industry is a lucrative one. East Africa's largest economy, which exports up to 70% of its flowers to Europe, is the biggest exporter of flowers on the continent, followed by Ethiopia and South Africa. Bettina Ngwele tells us just a little bit more about how this industry is booming.
Africa is fast becoming the hotspot for beautiful flowers around the world. Global floriculture exports have increased by over 80% since 2005, reaching $20.6 billion in 2017, with Africa experiencing the most growth and is anticipated to continue with increases of 5% every year for the next 5 years. This is mainly attributed to favorable government policies, a climate that is well suited to flower production, and of course, fertile ground.
Our major market is in Europe, where we command about 40% of the market share. And in terms of our produce, 70% of our produce goes to Europe. So anything that happens in Europe has a direct and immediate impact on what we do.
In Kenya, the floriculture industry generates over $1 billion annually, which is approximately 1.1% contribution to the national GDP. In Ethiopia, it contributes 80% to the country's national GDP, and its workforce is comprised of 85% women, and almost the same can be said for South Africa. With a favorable weather climate and minimal need to run costly greenhouses, as well as established transport links to Europe and easy access to cheap labor, East Africa houses the ideal conditions for the cultivation and production of flowers.
Fresh flowers, roses, the breeds of flowers that we sell to gifts, I'm not entirely sure they would do well in our climate. That's the truth.
Okay.
There are some growing in Plateau and in a few locations, but the quality is not the same.
Whether they are needed for weddings, birthdays, or funerals, or even just for aesthetics, flowers will continue to be a desired commodity around the world. Bettina Ngwele for News Central TV.
Many thanks, Betty, for that report. So let's quickly take you through NC4 to watch before we wrap up the show, looking at the stories that are trending in the business circle. Now, President Muhammadu Buhari joined African leaders in Dakar, Senegal, to launch the largest financial package ever mobilized in the history of the International Development Association. That is $93 billion geared towards a robust and resilient economy for Africa. 70% of the global fund will be spent on African countries between now and 2027, with Nigeria getting the biggest cut among the African states. And away from that, ratings agency Fitch has maintained its stable outlook for South Africa and affirmed the country's foreign and local currency debt ratings at a sub-investment grade BB rating. Fitch said the key factors for the rating were high and rising government debt, low growth and high inequality. The ratings were, however, supported by a favorable debt structure as well as a credible monetary policy framework. The South African Federation of Trade Unions is planning a national shutdown to protest the rising costs of living in the country and the ongoing energy crisis. The federation is the country's second largest trade union confederation with 800,000 estimated members. South Africa's CPI figures for June, set to be released in mid-July, are likely to show that inflation breached the 7% level on the back of rising fuel and food costs. This comes after inflation reached a 5-year high of 6.5% in May 2022, up from 5.9% in April 2022. And finally, the Consumer Council of Zimbabwe claims that due to the ongoing price rises for essential commodities and services, it is unable to estimate the cost of a family food basket for the month of June. According to CZZ, a family of 5 needs about $120,000 a month to subsist, with inflation jumping to 191.7% in June from 131.7% in May. Now, the total consumption poverty line for Zimbabwe from the data released last month by the Zimbabwe National Statistics Agency is $18,425 per person in June 2022. And this shows that a person needs to spend that much on both non-food and food products in order to avoid being classified as poor. And that's it on NC4 to watch. Back to Tolu now.
Thank you, Lekan. This is where we wrap up the show for today. Don't forget to follow us on social media. We are at News Central TV. Download our mobile app and take us with you wherever you go around the world. And of course, subscribe to our YouTube channel and watch us on the platforms. We are available 11 a.m. West African time starting on Monday. Don't forget that here, right here on News Central, we put African business, the economy, and finance front and center. I'm Tolu Lokwe Adeleru Balogun. Do have a good weekend.